Hello everyone, welcome to Commodities and Currency Buzz. This is Manav Modi, your precious metal analyst. Let's take a monthly overview for commodities. Taking a glance at precious metals, we've seen after gaining some momentum in the first month of 2023, both gold and silver prices witnessed some profit booking. US jobs market data and Indian Union budget were the kickstarters for February month. US jobs market data, were reported strong, better than expectations. However, Indian Union budget witnessed some duty structure change for silver, aligning it with that of gold. So that supported a move overall in the domestic prices. Also this month, that is February, we saw that the main highlight was Fed official statements which were quite hawkish. We witnessed that hawkish statements increased the rate hike expectations, supporting an up move in dollar index and US yields. Overall growth factor is also an ambiguity for the market, weighing on the silver prices. So this month, that is March, we see that economic data points, overall Fed statements, geopolitical tensions updates will be some of the key factors to look at. Looking at the outlook, amid these factors, we see that overall gold has a support near 54,500, 54,000, whereas resistance is placed at 56,500. For silver, we have a critical resistance at 68,000, whereas support is placed at 62, 63,000. Deep buying would be recommended for targets higher. Talking about energy segment, we've seen crude oil remained weak for the previous month. Overall global macro recessionary fears was one of the major factor. We also saw inventory build up also in the previous month. So optimism regarding the China's reopening story did not really help or support the prices. We also saw that US SPR releases by about 26 million barrels created a glut in the market. Also, interest rate hike expectations is sort of raising or creating volatility in the market. Also to look at is that Russia's overall crude oil supply is still going on in the market, and sanctions on the same are failing to create any large or major deficit. Talking about outlook, crude oil could remain sideways in a range of about 6,000 to 6,800 with sideways to lower bias. Talking about base metals, we've seen that copper was a bit lackluster in the previous month, where it moved in the range of $9,300 to $8,800 on the LME front, whereas aluminum prices from the peak dropped by about 11%. So main factors were volatility in dollar index, a weaker demand, build up in inventories, and mixed economic data points. So China's ease off story of the overall COVID policies did spike or did support the overall metal prices, but an ease off was seen quickly in the second half of the month. We've seen build up in inventories capping, weighing on the metal prices. So aluminium on LME witnessed about 60% jump in inventories, whereas SHFE warehouses witnessed 180% jump in the overall inventories. Also, supply constraints have been capping losses for copper, whereas fall in input cost have been creating volatility, especially for aluminium prices. So copper could continue its lackluster momentum, but any dip could attract buying, whereas for aluminium we see that it has good potential to have a strong comeback with supports at 202, 204 and resistance at 215 and 220. Thank you. This was your update for the month of February. For more updates on commodities and currency, do subscribe to Motilal Oswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.